Well, our base case scenario will state that we are expecting a growth of about 6.4%, slightly up from last year's expectation. And that is based upon our expectation that there will be both higher public investment and drawing on that, complementing that higher private investment. There will also be easing of energy constraints as the rental power of set in motion by the government comes on stream. And on the remittances side, faster growth of remittances would help consumption and therefore growth. But on that side, we still have a question mark. In terms of the short-term risks, there is rising food and fuel prices, and this will put pressure on the budget as mentioned earlier. There's also the issue of remittances flattening out or declining. Now, if this happens to a greater extent than what we anticipated in our base case outlook, then that can affect both reserves as well as growth. And finally, there is the issue of stock market volatility. Finally, on the long-term risks, the important one is the impact of prices on the pace of poverty reduction and the need for the government to really manage that. And in terms of the power sector, that's always been a bugbear for Bangladesh. If there are insufficient results in the efforts of government, arising from the efforts of government to generate power capacity and to, at the same time, to be able to, in partnership with the private sector, then unfortunately that will continue to pose a significant constraint to increasing the pace of growth.